Warren William here from Smartest Data, helping you understand the language, jargon and the ins and outs of the stock markets and investing in general. Quick definitions continues with the equity capital markets. What is the difference between the equity capital markets and the stock markets? Let's go to the video, define and explain the role and function of the equity capital markets. In summary, at the end of the video, there'll be 3 quick bullet points to take away. The equity capital markets is the primary marketplace for companies to raise equity capital. A company could transform into a public company via an IPO or raise capital via the issuance of new shares. The equity capital markets refers specifically to the primary marketplace for companies to list newly offered shares on the local exchange. Key in the management, pricing, underwriting and distribution of the new shares will be the company's primary broker, which is a member of the exchange. The main equity capital market transaction is the initial public offering, IPO. Any of the array of corporate structures could go through the listing process via an IPO. The process of demutualization, taking a mutual company into a listed public company, which happened when several mutual insurance companies listed, or taking a private company and listing it on the stock exchange for the first time. The other most common transaction involves an increase in share capital via the issuance of new shares. The new shares could be presented to the investment community by one of 2 main methods. First, a public offering where the new shares are open to one and all to subscribe, or 2, via a private placement where the new shares are offered to existing shareholders and selected interested parties. In order to generate interest in an increase in the share capital, the new issuance could be offered at a discount to the share price. Other equity capital markets transactions include the issuance of preference shares or warrants issued by the company. If exercised, the warrants will increase the company's equity base at a point in time in the future. In closing, 3 quick bullet points regarding the equity capital markets. The issuance of new share capital. This is the primary marketplace for companies to list newly offered shares, IPO or a share increase managed by the primary broker. The initial public offering, IPO, this is probably the main equity market transaction. The issuance of new shares by either a public offering or a private placement. The equity capital markets is part of the function of the stock market. That's the 2 markets for an exchange are the primary market, the equity capital markets, and the secondary market, that's the trading.